Welcome to the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now, here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to episode 206 of the AJ Brown Show. Today is October 17th, options expiration day. AJ, the government is still shut down, but we're getting a lot of noise in the markets. Things are starting to people are starting to get nervous. What's your biggest takeaway? What are you looking at today? I'm hearing banking. What's on your radar?
Yeah, this was the week of earnings for banking. I mean, we're flying blind sip without any of these government reports coming out. So all investors are focused on tweets, they're focused on any of the Fed governors speaking, they're focused on earnings.
I feel like we should start with that big sell off on Friday because we were
Mhm.
on the show on Friday and we were like, oh, what's going on? That big bar to the downside has, basically the rest of the week, we've kind of been not knowing whether we want to go back to highs, whether we want to break that. Did we end up finding out what that was? Was that really just the China news?
Absolutely. So, that China news will affect even this big bubble we've got around artificial intelligence. So, messing with the whole China deal, investors expected, like, if we had a meter, there was a high possibility or probability in investors' minds that the US and the China would come to a trade deal. Throw any sort of wrench in that gear and make the investors lose any sort of confidence in that belief that they had that everything was going to be at least okay, and that's what you get. You got a huge sell off. And even Trump coming back Monday and having people like Scott Bessent say, oh, no, no, that was, a little bit extreme. Things are going to be okay. You can't just take investors, and investors are fragile right now, especially without any of these economic reports. You know, they don't want to just trust somebody's like opinion. And we know about, the taco trades. Investors, they don't know what to believe. And so they're like, I don't want to trust these tweets, but there's nothing else to go on.
And even this morning, when Trump gave one of his press conferences, a reporter asked him, I think it was as blatantly as, are we gonna keep the tariffs on China?" And he said no, and the market, rallied back to break even before we even opened, based off of just that one answer, which I
Mhm.
think touches on your one of your notes this morning, where we're very news sensitive driven at the moment, which I think you can see with the charts and just how there's really no patterns that are evolving here.
Well, I'll tell you, there's one pattern, Sip. Take a look at the price of gold, right? If we take a look at the 3-month chart on gold, this pattern here, we're at all-time highs. I mean, when I was buying my Costco gold a year or so ago, it was literally $1,000 per bar or per ounce cheaper. We're up at 4,000, almost $4,300 per ounce. Why? Because gold is considered, the place that you can put value when currencies, when fiat funds, when basically everything else is unbelievable at the moment. So there's a lot of money going into gold and precious metals. And then so that's a pattern that, does have some sort of thought to it. Should we look at the VIX, man?
We should, but on that note,
Hmm.
as I was scrolling through Twitter this morning, I kept seeing lots of posts of these bullion uh, buy and trade places all around the world. I saw a bunch in China, I saw a bunch in Australia, where people are going to sell their gold because we're hitting these all-time highs. And so, do you believe that this 4,267 is sustainable, or is this usually one of those first signs of cracks across the board, and this is where that flight to, I mean, we haven't had a big pullback yet, but if the money's heading into gold, is that usually one of those first signals?
I mean, it is a strong signal that there is a lack of belief in just about everything else. Yes. Um, I'm not ready to sell any of my gold at this point. I see, the excitement around taking profits, but at this point, if you put a trailing stop or something like that in place, you'll at least take advantage of whatever further upsides. I don't usually like to trade anything that's trending based on a profit target, meaning, once it hits a certain level, sell. I would rather, when I'm don't know where the top is, I'd rather identify the top either with technical indicators or with some sort of trailing stop before I sell, because I don't want to sell short. I mean, as far as I'm concerned, if this is the beginning of the cracks, gold is going to go even higher.
Yeah, and so the money's flowing into gold, and then one of the other signals is money flowing into the options industry, which you can kind of quantify using this VIX model.
Absolutely. So the VIX, we often talk about it as a measurement of confidence or fear, but when you really break it down, what it is, SIP, is when people are purchasing options and when people start buying something that has a limited quantity, it drives the price up. Why do investors buy options? The most typical use of options, especially by the market movers, the big money traders, is to hedge against risk. And so this past week, I mean, last week and Friday, I was going in here saying, I don't know if my VIX trade is going to do anything but break even on October 17th, which is when my VIX trade expires. Well, now I've already closed my VIX out trade out right before this show, and I closed it out at max profit because it totally, all I had to do was be trading above $22. This morning, when I was trading up above the founded, unfounded fear threshold of $26, my VIX trade was already at max profit. There was no more it could go. So I just liquidated it and took the full profit. So yeah, people, investors, big money investors, the people who we call market movers, the hedge funds, pension funds, the mutual fund traders have all been buying options because they're afraid, and there's a belief. And especially when you start trading above 26 on the VIX, it means that there's not only a belief that people aren't doing this just to cover their butts, but when it starts to get above 26, it often means that, it could actually happen.
And to the viewers out there, this is a trade that we've kind of reviewed the past 3 or 4 weeks, with the
Mhm.
consensus being we might not break through, we might just kind of break even on the trade, and the thought being that when we do get a big crack, that's when the profits are going to roll in. And so you're saying that you're out of that, you maxed out on the profits. Now, because it's options expiration today, what would be your next move in this trade? Are you just going to kind of let it play out and see if we get back under that $18 and then look for one of your signals, and that's when you would be putting the VIX trade back on?
That's exactly how we do it, Sip. So we're out of it. It maxed out with these fear. When this much fear enters the economic markets, the powers that be, whether it be the Fed or whether it be, the fiscal government, fiscal policy makers, they pay attention to this. And so they start flipping levers. I could show you one lever that's starting to be flipped. Remember, we watch that behind the scenes tool that the Fed uses. It's called quantitative tightening, quantitative easing. Well, notice
Which has been trending down for, I don't know, the last 6 months of the show whenever we review it.
more than 6 months. Let's take a look. That's a
Goodness.
year. I think it's been trending down. Remember when they started it, and then all of a sudden a couple of regional banks started to fail? You see how fast they are to respond, and then they after they took care, they put a couple of guardrails in place against regional bank failures. Continued to come down, continued to come down. But I want you to notice what's been happening in the last 2 weeks. So they're actually switching tactics, and they're starting to do quantitative easing, which means they're buying bonds again. That's another indicator that the Fed is behind the scenes pulling some levers in order to buffer this fear that is appearing in investors, right? Because you can't have that was what happened in 1929, almost 100 years ago, when we had the Great Depression for over, it wasn't until World War II and the US entered World War II that we were able to finally start to recover from the Great Depression. That was almost 11, 12 years of, people at food lines. What happened is people rushed to take all their money out of the bank. You don't want investors rushing and taking money out of securities. You don't want a collapse of economies. So the Fed's already behind the scenes starting to pull triggers when this much fear. My point is back to your question about how the VIX trade would work. Um, these moments of high fear, like when Trump announced the tariffs, right? They tend to quickly get quelled. So I don't expect this to last much longer. And when we are looking for the next opportunities on these VIX trades, yeah, we look for the next bottom to come. So we'll usually put our 3 and 5 on, or some sort of indicator on that. I'm basically waiting for my next green arrow, and then I'll apply my next VIX trade. So it may be my November expiration. I'm not sure. But man, I had about 11, 12% of my portfolio into this trade. And it's basically close to not only doubled, it's just under tripled because this VIX trade went so far this time around.
And looking at that quantitative, like when you pulled that chart back and we saw the big blimp a couple of months ago, that was
Mhm.
driven by the Silicon Valley
You
Bank
remember that?
failure, right? And so this week or yesterday, there was some news coming out of these regional banks that there was some fraud happening, right?
Yes.
And I think it spooked a lot of people because they're like, oh, this is reminiscent of 2008. At least that's what I was hearing in the commentary. And people started running, which is why we got that spike.
Not only that, Sip, but not only has this current administration, and actually not only this current administration, but since Trump won, and even during the Biden administration, there's been an unraveling of those protections that were put in place after the 2008 crisis. And so a lot of these, protections for especially mid-size and small banks, well, they're not there. And in addition, who implements these protections? The federal government. Well, they're out right now. So, you know, the Federal Reserve doesn't take a break, right? They're not really part of the federal government. So the Federal Reserve is doing their thing. But man, I don't know about you, but this Congress team, the people who are in charge of the budget, how they can't come together and come up with a budget and open the government back. Uh, I mean, it's time to get rid of them all, in my humble opinion.
Well, you heard it there. So then in terms of what we're estimating, from a interest
I
rate
think we should,
perspective,
and I think we need to have you in Congress doing the accounting.
me, I would just be asking Chat GPT, hey Chat. um, so are we still kind of on pace for all of our expected rate cuts for the year?
More than enough. So that was that was why the market really didn't. So let's come back to the S&P really quick. You know, the reason why there was so much weakness, whether it was the whole discussion around China and the US, whether it was the government shutdown, whether there was increased rhetoric about the AI bubble being overinflated, right? They're not calling it a boom anymore. Almost all the economic, the economists that are on, especially talking heads, are all calling it a bubble, and it's not a matter of if, but it's a matter of when it's going to pop, and about how far it's going to pop. So there's all this negative Nelly news. There's some positive news, and the positive news is Fed governors have been speaking. And I hate to show this because it has nothing. Our economic news report has no economic news, but on Wednesday we did get our beige book announcement. The beige book comes out 2 weeks before the Fed meeting, right? The Fed governors meeting. And the beige book has all the raw data from the different regions. And this beige book, if you dig down into the, numbers, all of the regions are showing softening, especially in employment. So when the silver lining for investors is that they believe almost with 100% certainty that come October, we're going to have a rate cut of a quarter point. And in December, we're going to have a second rate cut of a quarter point. So that was what was basically keeping the market, I believe, this week from doing anything besides being sideways chop, is that the Fed is pretty much, we never know exactly what they're going to do, but investors have almost 100% belief that for each one of the last two meetings of the year, that the Fed will be cutting a quarter point rate
And
drop.
And I guess one of the benefits of having a closed government is we don't have our inflation data to tell us, how fast prices are increasing, because that always seems to be the other side of the pendulum, along with these employment reports, which I thought was pretty funny this morning on CNBC. They tried to put together their own unemployment report. They're like, well, given the data that we have, that we look at, we have four states missing data here, but this is kind of what we're estimating. And, you know, uh, as you mentioned, I think there is continued softness in that department, but the uh, the market is kind of, flatlining here a little bit. The AI bubble was a big narrative that kept being, I saw some things being mentioned that the entire U.S. economy system is being uh, held up by AI right now. Is I saw a couple variations of that kind of a statement, and then the banks, right? I think what we did get some of this regional bank stuff. The good thing is last week we were talking about banks. Last week and the week before, we were saying that there might be some potential setups and some banking names. We'll review those. But on the positive note is we did also get some good positive banking news that came out. And so it was like, oh, we have some failures, but it's not systematic, so maybe it's not so bad. Um, did you? I guess are you keeping an eye on any of these financials? Are they in play for you, or is this something that maybe you discussed yesterday at in your mastermind call?
Uh, a little bit. We talked about the banks, but in our mastermind call, we like to focus on premium selling. And since this was the week that banks were reporting earnings, uh, earnings trades were really the soup du jour on the financials. So we didn't really cover it yesterday. What we did cover is kind of the technicals, because the S&P, uh, after over 6 months of a certain direction, changed gears on us, right? With Friday's low close, that confirmed a last Wednesday, not 2 days ago, but a week and 2 days ago, top. And with it going, remember, you and I were talking last week about this threshold here. We had been telling everybody about $6,605. Well, as of the close on Friday, we actually closed below that. And that triggered a whole bunch of stuff in folks' technical analysis, right? Um, with that close being dropped below, in fact, if I put my famous rainbow diagram on it, not only did we drop below that $6,605, we also dropped down below the lower threshold that we keep track of about $6,570. And so, that's significant. Now, it could be, again, just a news headline, and actually the retracement analysis will ultimately filter that out if it is. But the scoop is that triggered us to think about a trend change. And the reason is this becomes a range. As soon as we cross that threshold, this becomes one of our range expansion moves in the down direction versus what we've been having since April 8th, which is range expansion moves in the up direction. That means this particular move that we just got through, that started on September 25th, ended on October 8th, becomes the end of the previous. You can see how my previous trend line ended at the end of that move on October 8th. And our new trend line started on September 25. You can see this new trend line that we have drawing for us as we accrue each day. And the last thing I want to say about that is you'll notice, especially if I go back in time and look at the previous trends since April 8th, you'll notice, there becomes a certain point where we start drawing channel support and resistance, which is parallel to our trend line. And you'll notice we haven't started drawing that support and that resistance on this new trend line. And people might say, well, you could throw some support and resistance in there. It wouldn't be hard, but think about this. What is support and resistance really? It's where investors have seen a level tested a few times in the past, and they start to make their buying and selling decisions based on those thresholds, right? And so in order to actually have a level of support or a level of resistance, you need to have a minimum of 2 tests of each, right? In order to have a line, you need to have at least 2 endpoints, right? You need to have 2 points. And this move right here that we had that was on Friday, that's marked in yellow. And the reason is because that move is not yet settled. We haven't actually confirmed that this is as low as we're going to go right now. We could actually go lower. We wouldn't get a confirmation until we get our green arrow. So this is how low we've gone so far on this move, but this is not how low, this isn't a confirmed bottom yet. So I don't even have 2 tests of support, and I definitely don't have 2 tests of resistance. So we call this an immature trend. It's immature. And until it becomes mature, we're not going to draw channel lines, and we're really not going to actually give it so much credibility. We're not going to trade a trend reversal or start trading sideways chop on it with short-term trades until we have a mature trend. So that's kind of something to pay attention to. And if it doesn't mature and we get another trend change, which has happened, it's possible, then a lot of times we call this immature trend kind of an outlier. I like to call it, because I'm kind of raunchy, I call it a little fart in the pan, right? And so the scoop is we might actually wind up ignoring this. And that's why, if last Friday was just a reaction, not actually internally market driven, ultimately the retracement analysis will ignore it. But right now, I mean, we're in this limbo state. And I think that's why we're seeing this rush to gold, this rush to the VIX, to options to protect these trades. It's because people really don't know what's going to happen next. I think this earnings season, I think the Fed results, and I think if we can get the government open, we can get some data start coming in from these organizations that's their whole focus in life is to provide data. I think if we can, you know, get something on the books with China, which would stabilize the markets, I think we could actually do okay. But minus any of that and throw in an AI bubble that could burst at any moment, I think we're on some weak territory moving forward.
Yeah, and as you're making this very detailed analysis, I'm thinking to myself, since basically April, we've just been on a straight rocket ship up. And, I can't believe that we're already heading into the holiday season. We've got 2.5 months left of the year. If we pull back to that 6,500, 6,400 on the S&P by the end of the year, I mean, that would still be considered a very successful year, which, at what point do you kind of start to take a look at that and say, hey, the pullback might actually be okay while we kind of settle some things out, because it has, and we've talked about it, a lot of these major indexes are being driven by a handful of names which are being kind of front loaded because of this AI anticipation.
Yeah, a pullback is not a bad thing, but it depends on like for instance when they talk about this bubble bursting, it's not a matter of if, it's a matter of when, and it's a matter of how deep. So if we start to get that pullback, we'll be watching levels of, especially since we're on a new path with a whole new fiscal policy. The US government hasn't been built on tariffs for 100 years. So changing the rules of the game and all of that good stuff, we'll be watching this level over here. This was the level that pretty much we got to before we started changing all this. We'll be watching this low level over here of when we first announced that tariffs are a real thing. We'll be watching those levels. If we start to crash through those levels, Sip, it might be that, this experiment is failing. So we'll keep our eyes on it. That's all we can do. And then we can use our option strategies in order to profit on it, because options allow us to profit in any situation.
Yeah, that's what I was gonna say. I mean, 206 episodes. We've had up days, we've had down days, up months, down months, et cetera, et cetera. But the strategies that you're teaching and that you're working with the community on are either time based or hypothetical based. Just like 27 different, was it 27 or 29? I always forget, 27 maybe. That's the beauty of it. And so, just this week we talked about that VIX trade and the market pulled back. We made money on it, or you made money
A lot
on
of
it.
money.
And that was one that, I mean, it may seem a little, new or confusing to people, but the way you do it every, 3 or 4 weeks where you almost break even, it's kind of magical. It's a beautiful thing to watch. All right. So, let me ask you this, AJ, because I know you've been flying around. I've been flying around. Are you using the internet a lot on your flights at all?
Yeah. I mean, almost all the airlines are allowing us now to have Wi-Fi on board. So, yeah, I use it.
So I have tried to use it, but I've always been disappointed in the actual deliverable. And
Mm.
so on this week's morning sip, I don't know if you saw the big headlines happening this week, but let me go ahead and share my screen here, and we can kind of talk about this, because I've been a big Starlink fan for about a month now. But there was this big news that came out that United is going to be turn this out is going to be equipping every one of their jets with Starlink. And so they put out this big kind of promotional video, which was pretty cool. But the thing that really got the internet rolling
The
was
first
what are
commercial
these?
live shot ever on a TV station.
Let me hit this one right here. Was basically the very first live broadcast on a TV station from a plane. And this is one of the videos. It's an NBC News anchor, and then he basically sits down, and he's got all of those like high data quantity streams hitting his laptop there, and then even more so. What am I doing here?
And then he accessed AJ's quick links.
Well, sure.
He should.
But somebody was basically showing the speed of the Starlink connections on the
In real
United.
time.
Well, this guy just posted a screenshot, but 96 megabytes a second on the download is pretty wild. And so
That's 4K streaming times 2, times 3 almost.
I mean, every time I've tried the internet, I can barely get anything done. So this really changes the game for flights. And I just thought that was cool. I've got a big long flight back tomorrow. And it's not United, but I think you haven't used a Starlink yet, have you?
No, I haven't used Starlink. I have used some of the like T-Mobile or Verizon, 5G, and you get really impressive results over the air with that, but never through the satellites yet.
Man, I think it's like 4x faster. And so, when I traveled to Europe, I brought my Starlink and I was so jazzed up to use it. But when it's cloudy, it really doesn't work. So,
Oh no.
and
So when it's rainy out, you have to go find something else to do besides work on the internet.
Well, fortunately, the T-Mobile, like you said, the T-Mobile hotspot has been working. But man, very, very impressive. Elon Musk is another one of Elon Musk's companies, but like to give people access to the internet with such a high speed in the most remote places of the world. I mean, I think that really benefits a lot of enterprises, a lot of countries, a lot of people. So I thought that was cool and worth sharing. The sip of the morning sip on Starlink, now available in United Jets.
Now, isn't Starlink, you might know better than me, but isn't Starlink the game changer for the Ukrainians, and why such a small force has been able to keep off the whole Russian army that is one of the biggest forces? Is they have Starlink, they have the ability to do their drones and all of that really, garage built technology that is holding up. It's like what was that? The lion, the guy that out of the I can't think. Maybe one of our viewers type it in, the Goliath. Anyway, wasn't it Starlink? Isn't Starlink the backbone to that?
You really lost me there. I'm not familiar with a thorn and a lion fairy tale of some sort. No?
I can't think of the guy's name. The name of the lion was Goliath. But
David and Goliath? No.
Yeah, maybe.
No. Maybe.
I don't
All right,
know.
folks. That's us rambling. We're trying to keep it more exciting. We'll enhance that segment here over time. Don't worry. But with that in mind, if you are joining us for the first time, welcome. Thank you for you guys joining us that join us every week. Thank you again as well for joining us. As always, the chat is live. So if you have a question that you want AJ to run through, if you have a symbol, if you're working on a strategy, feel free to throw it in there. We've got some bandwidth today to maybe run through some of those. Otherwise, if you're new to Trading Trainer and AJ's approach to investing, we've got this quick links page. It's got a lot of juicy stuff. We've got all of our social links. You'll see AJ refer to some of these indicators. All that is available in the free indicator suite. You can register for the daily workshop, which will break down these 4 core premium selling strategies that are really great for anybody that wants to get started pretty slowly and get involved in premium selling and options trading. That's a great source for you. We've got a coaching program, and you can go check out the whole trading trainer program here with this link at the bottom. So I'm going to go ahead and throw this in our chat. We're going to take a break. We're going to go over some of those bank names that we discussed last week. We've got AJ's pick of the week, and if anything else comes up. Otherwise, sit tight, folks, and we'll be back in a jiffy.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
I have to take a look at you really close because you look like a movie star.
My response was going to be AJ's the real movie star. He's the movie star behind the scenes.
I think that they know that you take improv classes and that you live in LA.
Well, look, I went to the mall the other day, and there was these 2 guys that were promoting one of their beard oils, and like a little.
Yeah.
I don't know if you're a beard oil guy when you
Oh
got
yeah,
one.
when I've got a beard, you betcha. That stuff is the bomb. You don't want a dry beard.
And it was one of those with the microphone. So I was like, I'll hear you guys out, right? Da, 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 da. We talked, and then we took a photo, and in the photo they tagged me, and they were like, "We found Brad Pitt," or something. Like they said I look like Brad Pitt from some F1 movie. I was like, I don't get Brad Pitt, but hey, sell your guys' beard oil.
Yeah.
I'm a fan. I'm a supporter. All right, cool, AJ. So before, I say we dig into SoFi first, because that was last week's pick of the week, and we've been talking about banking. So before we go into this week's pick of the week, let's see what did we end up getting that trade executed? Because I believe you said you wanted it to go up a little bit further before you were looking at a position here.
Yeah, and so I wanted to get my top signal. I got my top signal on the same day that everything else sort of, crashed. But remember, Sip, I'm an end of day trader. So I get my signals after the market closes, which means then I'm going to look to act the next day. I call it looking for follow through. So I was looking for follow through and never really got any sort of follow through, and the signal got reversed on me on Tuesday. And so I stopped looking for follow through. Now, yesterday I got another signal that we had found a top, but 2 things. Number one, again, I'm not getting my follow through today that I need to get in order to open the trade. And number 2, I have a price target that I needed to be above. So I needed to find a top, but I also needed to be above a certain price level, and I'm not above that price level in my trade plan. So probably no trade is going to happen until we kind of beef ourselves higher, or Sip, I could actually reverse. We were talking about shorting this, but if I start to get down here around maybe the $24 mark, $24.50 mark, and start to get a bottom, and I get that below my threshold, I could reverse the whole trade on itself. I could, instead of going short SoFi, I could go long SoFi. I could buy the stock, or I could buy a substitute call option and then start trading call premium and rolling in and out of protective puts, doing that collar on, collar off. Every time the collar goes on and then back off, I make 2 sets of profit. And those are the trades I like. I like to have a single, I call it a covering position in place. And then I like to roll in and out of these collars. And that is like a monthly income. making double-digit returns on the symbol. And the longer I can keep that initial covering and position in place, I mean, I target 5 or 6 months or more. The easier the trade is because you're familiar with the underlying symbol and all you're doing is adjusting it once or twice a month. And, it's just like easy money. So that's what I look for on SoFi. So nothing yet. That was a short story made long. Nothing yet. And then also, we've got earnings coming. Let's see when that actually is scheduled. There we go. Before the market open next week, October 28th. So we could actually, do one of our earnings trades on SoFi. If I look back at SoFi, you'll notice that every time there's an earnings, there's very little price action. And for what what we've been talking about is one of the best earnings trades is a calendar spread, right? A calendar spread does really well with the volatility rush that comes up right before earnings and then the immediate crush right after earnings. And the only caveat is we really don't want something that's going to unpredictably move, off of where it was. So we look back at least to the last 4 earnings and see how investors digested these earnings. Investors kind of take SoFi's earnings and, kind of, say, okay, great. And they move on. So this would most likely, just like this week, we did a lot of earnings plays on financials. I think that instead of getting all caught up on selling premium right now, maybe we prepare for an earnings trade next week on SoFi.
Yeah, so I guess the short answer is this was a maybe. This was a maybe setup, almost setup, almost got there, almost triggered it the way that you like. But that's kind of the beauty of your watch list is not everything's gonna hit, but that's okay because you really want the setup that you have that's the most proven over time.
Well, the scoop is at any one time, I've got, 5 to 10 symbols and I've got trade plans. If anybody's been part of my programs, you know that I like to, before I even jump into one of these candidates, especially these trades where I'm going to hopefully hold it somewhere between 3 and 8 months, I'm going to analyze the heck out of it, right? And I'm going to create an actual trade plan, which has a step 1, step 2, step 3 on how I leg into the various, positions that make the overall trade work, right? And they have price thresholds and they have signal thresholds. And so I have these 5 and 10, and every evening I look and I see if any of these candidates are ready to increment to the next step in their particular trade plan. And if they are, I'll program the automatic trader for the next day to look for that last minute follow through and then execute the trade if it makes sense. And so that's just what happens. SoFi, there's been a couple times where I've triggered the automatic trader, and the automatic trader by the end of the next day was like, you didn't meet your last minute rules, so no trade was made. And that's just how it goes. But some of my other symbols, totally the trades worked.
Yeah, and I mean that's why everyone who's watching that's not already part of the program, these are the juicy details that you get behind the scenes that we don't post on YouTube that make our community as successful as it is because
Yeah.
they are working together, and you're really only taking the things you feel best feel best about. All right, let's see what we got in the works for this week then. Your pick of the week for this week is Novo Nordisk. Let me see.
Yep.
Novo Nordisk, ticker symbol NOV. Not really even sure what these guys
Oh,
do.
I'm sorry. I wrote NOV in our notes. I apologize. It's NVO.
NVO. I'll switch that up right
NVO.
now.
My Listexia kicked in. Yeah, it's NVO on all of those in my notes. So yeah, Novo Nordisk, right? Pharmaceutical. You've heard of them, right? And I'm looking for a bottom. on Novo Nordisk. I think it's time to start buying on this. And I know that people are saying you're crazy, but Novo Nordisk is in this channel roughly between about $54 and $61. And I'm waiting for my signal. You can see my signals here. In fact, let's look at my signals. By the way, these indicators that I use for my signals are available to you for download at no cost. So if you're part of our free indicators, it was available on that quick links page. You could totally jump in on that. I like to use the fast MACD calculated specifically on the volume weighted average price versus the more typical close price. And so I'm waiting for that light blue arrow to come, and that would be an end of day signal, as I've been talking about. And I'd look for subsequent follow through and let my automatic trader trade it during the day after I get my end of day signal. But yeah, I'm looking for that bottom. And if I get that bottom, especially if I start to trade below $50, all bets are off. I've got those price targets. But if I get my bottom anywhere above $50, what I'm thinking about is either buying ticker NVO in lots of 100, or there is a substitute option I was looking at. Let's see if I can pull it up here. I've got my options lookup tool, and this is again part of that indicator package right now. You could beta test this with me. We've got data going back about 15 months. All of the it's literally terabytes of data that we've put on the cloud, and we've got a user interface on. But taking a look at Novo Nordisk, looking out, and if I'm going to use a substitute option, I want to go at least 8 months out in expiration. So I'm looking at the June of next year expiration date, trading every $5. I wish it was trading every $1, but that's okay. We can make that work. And the option that I'm interested in, I put the $40 call in our notes, but I'm actually probably more interested in this $30. No, I don't like the liquidity. Maybe this $35 call. So this Novo Nordisk, ticker NVO, $40 call, $35 call is what's getting my attention for a substitute. So instead of this thing's going as of yesterday evening, going for about $22 a share, $23 a share, that's about half the price of the stock. So save a little bit of money, include a little bit of leverage on that initial. So when I get a bottom, that's what I'm probably interested in, is that $35 call that doesn't expire until June of next year. If I was in a short position for my initial covering position, then my bottom signal would be when I would want to sell put premium, buy protective calls. This is what I'm interested in this week. We'll see if we get our bottom signal before we drop down below 50.
Yeah, and pharmaceuticals, they're in debate now based off of keeping the prices contained and whatnot. But in general, it's not an AI play, so there could be that run back up to 80, which wasn't, but at the beginning of June. So something to maybe look at some of the fundamentals back there. Would this be like one of those 3 to 4 week positions, or you would just feel it out?
This would be one of those 3 to 8 month positions.
Okay.
I feel like this is one of those boring stocks. I feel like it's entering a boring, movement up and down between about $54 and $61. So if I can get my initial covering position when I'm somewhere between $50 and $54, and then every time I'm up at $61, I put that collar, I sell that, $60 premium, and I buy that $50 or $55 put, and then rinse and repeat, roll out and roll it to the next one. roll it to the next one, and each time making double-digit returns. I think you could milk this once or twice a month for like the next 3 to 8 months. And so that's why this is on my radar. I think that Novo Nordisk is boring enough that we could turn this into an income generator.
All right, we'll keep that on the watch list, folks. Ticker symbol NVO. Let's revisit it in a couple weeks, AJ. All right, don't have any fresh names in our speed round for today's show. However, we did get some follow-up questions for the positions from last week. Although I'm wrong here. You wanted to bring up and talk about Goldman Sachs. What are you thinking here, AJ?
Well, I want to review some of the earnings plays that were this week, and Goldman Sachs was one of them. Goldman Sachs, by the way, every quarter you can count on to be a fantastic earnings play. So if you didn't do it this quarter, put it in your notes, take a Post-it note, stick it to your screen, and remind yourself that every quarter you want to do an earnings trade, a calendar spread on Goldman Sachs. Let's just take a quick look. So to review for you, and I know we're almost out of time, but just a quick review. The way that the calendar spread works is the day before the earnings announcement, it's a debit spread. So you're going to buy something that's usually about 3 months out, right? And I think I've got disappearing ink. So let me change over to solid ink here on my magic marker. You're going to buy something for whatever price that's about 3 months out. And then what happens is ahead of earnings, the traders always have a certain amount of fear that their stock, whether it's long or short, will, fail them. And so they buy options, and they usually buy the option that's, literally 1 or 2 weeks to expiration. So they drive the price of that option up. So in your calendar spread, you use that, if it's got a weekly expiration, you'll do 1 or 2 weeks out. If it's got a monthly expiration, you'll do the next one out. And usually it's got an inflated price. So you're buying the back month, you're selling the front month, and the actual debit when you do this calendar spread is usually the remainder, right? You pay this, you get this back, and this is what you're out of pocket when you do the calendar spread, just this small amount. Then the next day comes, they release earnings, and a lot of times these earnings, especially if you do your research, they wind up being nothing burgers, and all of a sudden, all those people who were worried and who hedged their positions, they start to sell. They sell their front month options because they don't need that protection anymore, and they want to recoup some of that money. And it winds up dropping the price. So you wait patiently till usually the afternoon or, whenever earnings is, but you wait till the afternoon after earnings has been released. And that front month option usually drops down in price pretty significantly. The back month option pretty much holds its value. So if you can imagine, when it's time to sell out of your calendar spread, what you wind up getting is, again, this is the before. The after, that back month option tends to hold all of its value, but the front month option, after everybody abandons it, they're like, we don't need it anymore, winds up losing its value. So when you come along to sell your strategy, you wind up selling it for much more. This is called a volatility crush play. And so that's what Goldman Sachs pays us, definitely 25-30% on our investment every quarter, because they do so well with this volatility crush play. So yeah, earnings was this week. And the only kind of excitement about that, let me get rid of, now that I don't have disappearing ink, let me manually get rid of my drawings. You'll see that, again, price didn't change too drastically. There's more nuances to that calendar spread, like which strike prices, usually you choose at the money strike prices, but you err to the side that you have a little bit of a bias. And even if you get that wrong, it usually still pays out for you. So if you did error to the side of, the down, and whether you use calls or puts, I mean, there's no real rule of thumb. The intrinsic value cancels out of both of the trades. Usually what we do is if you're biased to the downside, you use puts. If you're biased to the top side, you use calls, but it really mathematically doesn't really matter. But if you, for instance, on this one at the end of October 13th last week, if you went ahead, or this week, I'm sorry, at the end of Monday, if you went ahead and had picked your bias just by one notch with the put direction and in the down direction with your strike price choice, I mean, I saw traders making 30-40% on this trade, Seb.
Yeah, and I imagine Goldman Sachs is one of those names that a lot of traders just have because traders are trade things that they know, and Goldman Sachs is in the trading business. Why
It's
not?
very liquid. It's very liquid, and that's one of the reasons why this trade works is because all those people who hold Goldman Sachs, every time earnings gets around, they get something inside of them psychologically that says, I think I better protect myself. And they buy those options just as overnight protection. They drive the price up. And what we do is we go in there and we buy that calendar spread, usually around 2-3 o'clock Eastern time, 1 or 2 hours before the market closes, when that price of that front month option has been driven up as high as it can, giving us the smallest price for our calendar spread. And then, like I said, the next day is when we get out of this trade. And because we hold it overnight, even though they're talking, they're getting rid of that pattern day trader or those pattern day trader rules saying it's unfair. Rather than protection. It doesn't, because we hold it overnight, you don't trigger any of those pattern day trader rules, which is what I try to stay away from. So it turns out being a fantastic trade. Goldman Sachs paid really well. Another one that we looked at, can we go on to the next one, Sip?
That's what we're going to do. Huntington Bank.
Yeah. Huntington Bank shares was today. So if we take a look at this, it was this morning that they did their earnings. I mean, again, let's look at the intraday. And I know we're coming again to the end of our hour here, but let me go ahead and just show intraday what's going on here. So actually, let me show you the difference between yesterday and today. There we go. So this was yesterday. You come in again in these last couple of hours of trading and you buy whatever strike price. In this case, I think that Goldman Sachs with the when you're doing that calendar spread, you're going to choose either 15 or 16 for your strike price on your calendar spread. You're going to use one probably expiring in February or March, and then you're going to use one probably expiring in the next 2 or 3 weeks. And then, the idea is you try to liquidate it when it's as close to the strike price as you can. So if you liquidated this in the first or second hour, but even if you're just waiting till now and you liquidate it, you're going to get both the volatility crush. And if you chose the 16 strike price, you're also going to get a little bit of directional movement. So Huntington Bank, if you did that today, I'm looking forward to hearing about your results.
And then real quick to close us out, RF with Regional Financial. What is that? What's the name?
This is
Region.
Regions Financial. Somebody brought it up last week. Regions Financial. Deborah from Denver, Colorado last week asked about it, and we talked about this trade today. Again, they released their earnings this morning. They had a call. You'll notice if you placed your trade yesterday in that 1 to 2 hour mark, it's a complete volatility play, whether you used calls or puts or whatever strike price you chose. you're probably it wouldn't have mattered. It all worked. Whether you used calls or puts, whether you used the 23 or 24 strike price, they all cashed out. So place the trade yesterday, get out of the trade today. And you don't even have to be stressful about it. You could just easily, wake up in the morning, get out of the trade, or you could program an automatic trader to get out of your trade.
Yeah, or you could hit that like, follow, subscribe button and tune into some of the cool stuff
We can get into the nuances of these trades if you
that
want to.
AJ and the team are working on some cool stuff, which is going to be exciting to release to the world. Okay, AJ, Friday, man, I'm looking at the market and we're up, we're down, we're closing gaps. The volatility still up here at this 24 level. Heading into the weekend, heading into next week, what are the big things and takeaways that we want to keep an eye on?
Well, let's talk about levels. So I'm watching very closely a couple different levels. The first level that I'm looking at is this 6,753 and 72 cents. If you wanted to round that, 6,755, or if you even want to, keep it even more simple, 6,750. Let's watch 6,750. If we start trading above that, then it's a good chance that this little trend change that I identified is never going to mature, and that there's going to be a resumption of the trend that started on April 8th. So let's watch 6,750. But let's also, should something happen, let's watch this level down here, this close from last Friday, roughly 6,550. So there's a 200 points there. 6,550. If we start trading below that, I think we need to be thinking trend reversal on ourselves. Again, I don't want to jump on full bore on trend reversal till I get my trend matured. But if we start trading below 6,550, I think we need to start, altering the number of trade plans we have to more premium selling and more, trend reversal type plans rather than, trend following plans on this trend that's been up since April 8th.
Yeah, and that could be, a time of the this part of the annual seasonal cycle as well. Although it'd be nice to get the government back running so that we could get some reports and some actual data, and seeing where some of these greater initiatives are, like you mentioned, the whole tariff thing. We haven't really seen it all play out. So like we need to get some data to really quantify a lot of these bigger decisions. But
I think that a lot of folks are, they just don't trust when somebody says it's working fine. They want to see data. All investors are data driven, right? They're emotionally, when it comes into the moment, they buy things and sell things emotionally. But behind the scenes, especially when the pressure is off, when they're analyzing things late at night, they're very data driven. So they want the data.
Whether it's good data, bad data, sideways data, AJ and the team have a great way to approach using options as an investment tool. As always, all of the goodies are on the Quicks Links page, so we highly encourage you to go check that out. Follow us along on some of those channels. If you have any questions on how you could incorporate options trading, we've been having some interesting guests who have been talking about different unique ways to do taxes, automating your system. All of these things. If you're interested in it and you want some questions, head on over to the Quick Links page, reach out, and someone's definitely going to try and help get some answers for you. Otherwise, AJ, I'm flying back to America in the next 24 hours. So I'm excited to set foot on the motherland and get back to business on that side of the hemisphere.
I bet you want some warmer weather too, man.
Oh, without a doubt. But it probably got weather like you have on the East Coast yet. I don't know how cold it's getting for you.
We're in the Fahrenheit. We're in the 40s and 50s.
Yeah, that's about where I'm at now.
Although I'm full of crap. Right now it's 65, and this weekend we're supposed to be in the 70s. So we're in fall weather.
Okay, I'm not mad at that. All right, AJ, any final words?
It's all about being, there's two things with trading, guys. Keep this as the final thought. It's about recognizing what the patterns are and then having some mechanism to utilize those patterns. That's it. It's recognizing what's happening and then picking the right strategy to take advantage of that. So make sure if there's going to be a pattern change that you're still not using the old strategies for the old pattern. Make sure you're on the ball with identifying the new patterns and make sure you're brushed up on being able to match the strategies. It's simply identifying the pattern, matching the strategy. You'll always profit that way.
I'll say one final thing, AJ. I haven't watched a lick of American football out here, and I'm very much looking forward to watching some NFL this weekend.
Yeah, very good.
All right, guys. Appreciate you guys tuning in. Hit that like, hit that follow, hit that subscribe button, and we'll catch you guys next week.
All right. See ya.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show,